Welcome to TradeTheMBI.com. This is John. This report is for March the 5th. Well, continue to push to new highs, unable to hold that a little bit. And again, this is where it gets a little tougher with the bull situation. Has to keep driving and pushing. Of course, new fund money coming in will help accelerate that. But you can see zero short activity, still within a modest MBI with the magenta, well, just right at the MBI yellow. So you could see some back and forth on there. And we now have the miniature DOC spread right there with short midterm buyers crossing below cyan. But cyan's still 292 below red. So it's still within the buy configuration. The shakeout's continuing to rise. So all still congruent. Doesn't mean you're not going to get a move back down towards like that ABM yellow. That would be typical. And that's that back and forth that goes through the NQ. Likewise, just filling back a little bit more of that previous high run. And again, we talked about this where the S&P is performing slightly better simply because it's behind where the NASDAQ has pushed through. But it's a little harder now that you've had such an extreme move from, your Magnificent Seven and that it's going to be a little bit of back and forth unless there's some evidence that, you're going to have an increase in economic activity, because at the end of the day, right now, most of the increase is just the reality of inflation, continued rise there, which is funny when you look at treasuries and the yield not really representing where things are at now, but their future idea that the Fed is definitely going to cut in an election year with inflation rising, which would be miraculous. Wouldn't that be amazing? It's like, yeah, cut rates into rising inflation. I don't know that that one's been done before. It'd be interesting to see them do it. Um, Got disaster written all over it. But then again, it's also disaster as it is now, given the borrowing needs, not sustainable. So we've finally reached this point where it's going to come to fruition. I think the market can recognize that. You're definitely seeing that activity in crypto. You're also going to have an artificially high level of commodities, because at the end of the day, commodities never take a hit when it comes to devaluation. So oil fading just a little bit, and of course that's going to be reflective of demand needs, and that's what we like to watch for, particularly as it relates to future economic growth, and whether or not there's a stalling or anything. And any steep decline in oil would represent that, because it certainly isn't going to be from production. Euro again being maintained in this unrealistic zone, with this idea that somehow the eurozone is going to come out of its doldrums. But again, it's not producing anywhere near what the American market is, and or prospects don't really look that great for it as well. So that also is a definite uh, way factor on the S&P, because they derive a lot of gains from that. And you can see this is something we expected, the blowout in gold, and this is corresponding to this understanding that inflation not under control and not abating in any way, shape, or form, given what we see from oil. Um, and it's just the beginning. You see it in the crypto, and this is not a bull case for, uh, you know, cryptos or anything, but you could see this building as there's been no serious attempt to rein in the deficit spending or anything like that, and it's just going to create continued devaluations. And so, breaking into new highs for Bitcoin in that, not a surprise, something that they've been long waiting for. ETH, likewise, just continued acceleration, and that's where the flow is going to be. When we look at it from our 50K standpoint, you can see we had the slight breakdown here with the magenta below yellow. That signaled the beginning of a soft downturn. We talked about the positive extreme. A little bit of fill right there. We had some further ones a little further back. They had already been filled, and then we get into the original breakout setups. But then, of course, you still have back here these original setups, and that's quite a significant move all the way back down to the 49 range. That's going to require some kind of catalyst as far as negative news print of something changing in the economy, as opposed to just this sluggish continuation. Intraday, always fun here. A little pop-up pre-market that just led to another blow-off right towards the close, and then right after the close, they just cleared all the stops and ran it down slightly below the previous low right there, and that's kind of where we're at right here in the post-market here, just soft meander at this particular stage. So all in all, everything's still pretty consistent with both the bull case, but within that, you're going to have these pullbacks to test resistances and that. And I think that's all completely healthy. Be if you want to continue rally, what you would need to see is some kind of erratic behavior that starts to lead to a breakdown where there's a loss of confidence in where the economic readings are going. I haven't seen it yet, but it can happen very quickly. It's only going to take couple of readings that give an indication that things have altered or changed. And they're going to do everything they can to keep things propped up. An election year, always the market does pretty well during that time simply because of the benign effect. No one wants to rock the boat in that, so to speak. And so nothing happens. When nothing happens, it's good for the market. You kind of keep Congress at bay and things progress fine. The problem is there's some real fiscal problems inherent in where the situation is, and they're going to come to fruition. And I think you're really starting to see that play out in the crypto space as well as in commodities. So that's going to be the excitement for the year, and it's going to continue at this particular stage. I don't see any reason why it wouldn't. As always, though, anything relevant, I will get it on the Skype chat, but just continue to follow those readings.